In today's session, of course, we'll be covering on the second entry module, and we know the second entry module is the decisional POI mitigation. Of course, I believe you are now like good with the first entry module, which it was inducement sweep, which we covered on our previous session, and today being day 10, we'll be diving into the second entry module, and of course you can clearly see there it's the decisional POI mitigation. Yeah, decisional, right? I can see my phone here still having the notification, so let me keep you on muted. All right, so right here you can see I've used the word you can see that I have used the word POI and not like specifically order flow or specifically order block. This is because by a POI, in that case, it can be an order flow or an order block. It just depends with what the trading range gives. By now, I want to believe that you all know that when we are marking the POIs, we start with the primary option, which is the order flows. And not until all the order flows are mitigated on that trading range, we cannot go onto the order blocks. Or not until all order flows are failed, we cannot go onto the order blocks. Because of this, the order flow is primary and the order block is secondary. Very, very important. All right, so of course this will be a direct entry. It will not be like we will not be diving into the lower time frame. In that case, I mean, let's say we are marking on the 15 minutes. Probably the lower time frame will be from the 1 minute all the way to the 5 minutes. So in that case, then yeah, since it's the 15 minutes, then same time frame, of course, entries will be involving reversal patterns. And I believe you have like on the previous session I said you guys go to whatever place you will go to check or to learn more about these reversal patterns. Even though we'll have a session of its own, I will recommend you also to be ahead and yeah, learn, explore them. There are many probably on the session or the session that will be checking on this and talking more about these reversal patterns. Maybe I may not cover all of them, like color all of them, and that's when now you go onto YouTube and check more of them because such scenarios do happen on the market. So we know there is the engulfing patterns, the pin bars, and the pin bars are the hammer, the shooting star. Yeah, and also the strength, it just depends with either it's bullish or bearish. Yeah, so the strength and all of that, it depends with the longer wick, small body, like things like that. No, the hammer, it can end up being a dragonfly doji, a gravestone doji. There is the tweezers, there is the piercing line, there is the bearish harami, bullish harami. But the bearish harami and the bullish harami, they're not indicating any reversal. They're just indicating like a consolidation, or not a consolidation, but some indecision, meaning the supply and demand is equilibrium or it's equal. So not until now, the next candle after the bearish harami gives the signal that the bearish harami, like if we say a bearish harami, this means that there is some possibility that price may reverse back, but it's not confirmed because there is some indecision, meaning that the sellers have stepped in. So in that case, now you will need another candle to make sure that the fight between the sellers and the buyers, like the sellers outweighed the buyers, so that we get that bearish candle, and then now we can proceed after that. So all that knowledge is needed on the, and yeah, you get to learn by you exploring more of these reversal patterns. So once price interacts with the decisional POI, that's when now we check for these reversal patterns. We need to read price behavior for any indication of some possible reversal. This word here is very important. I mean possible reversal, because yeah, I mean possible reversal because price, like it's not a must, like it's not that it's always, like yeah, it's not often that price mitigates a decisional order block or a decisional order flow and just gives the reaction. Sometimes price may just pass through the order block as if there is no like an order block there or a POI or a point of interest there. So yeah, we need to read the price behavior after price mitigates a decisional POI, and see if there is some possible reversal before we participate. So that's very important. From the name Decisional, you can clearly see the name, it's actually talking by itself. Decisional, we can clearly suggest that it's a 50-50 zone. Yeah, Decisional POI is a 50-50 zone. This means that price may sometimes respect it or not. This means that price may react from the decisional POI, or price may not react from the decisional POI. So in that case, then with this theoretical knowledge, now let's dive, or let's get practical, or let's get into the real charts. All right, so let me delete all these so that now we can have a clean chart and of course start the session. All right, so exactly right here. All right, if you have your mic on, you can mute it. All right, so exactly right here. I don't think if you guys I want to believe that you guys are good with market structure, so I will not be like going all the way whatever there. No, you can clearly see right here. Let me zoom so that we can see what's happening here. So real quick here, you can see the inducement is taken out. Let me use this one. There's nothing to, so that's there, the inducement taken out, break of structure, change of character, inducement swept, break of structure, minor inducement taken out, break of structure, and this one here is a change of character, then inducement taken out, change of character. So this means our trading range, our new trading range ranges from there and currently ending there. All right, that's good. All right, so exactly right here we have identified our trading range. So I got so that's our break of structure there, and this one here is the inducement, of course, a major inducement. So exactly right there you can see that's the major inducement, and yeah, this one is our low, and we can clearly see the inducement is already taken out, and in this case this is a sweep. We can clearly see that this is a sweep of the major inducement. You can see price wicked below, and then it's actually giving this and this here is a bearish harami, the one that I talked, I mean this is a bullish harami, the one that I talked about, and I said the bullish I mean a harami pattern showcases indecision. And so for we to confirm this one here to be a positive reversal, or a significant or a strong reversal, we need to see like a strong candle, strong bullish candle after that before we can participate for the buy. Because yeah, this is some kind of indecision. The buy, like the buyers have stepped in, but the sellers are also there, so we need to make sure that the buyers are the one dominating. So in that case, then I will need to run the price and see what exactly price is doing here. And you can clearly see price, the sellers outweighed the buyers, so this means the seller, I mean the sweep failed. And the reason as to why I said the sweep failed is this one. I said after the sweep you draw a line right here and make sure that that line does not get violated. I think I should use the shift key. That I'm more like of this other. All right, let me just change the color. So you can see I said that after the sweep you draw a line and make sure that the line is protected, so price needs not to break past that line. But you can clearly see this bearish candle wicked below that line. So in this case I usually say that's an early sign of the inducement sweep being violated. So in that case you just ignore and you mark the POIs. So we said the first thing that we usually check on is the order flows, because the order flows are primary and the order blocks are secondary. So in this case now we can clearly see, all right, let me use the path, even though I believe by now like you guys have practiced on order flows and you are all equipped. All right, they can see some pullback here and another one exactly right here. I said in this case usually check that, so there's no need for me to do this. Yeah, there's no need for me to do that, but all right, I can do that. So again, this is another one all the way down here again, another one that goes all the way to this part. All right, this here is a break. Yeah, so this means this here is a pullback by its own, and this one here is also a pullback by its own. So this means that all of this here is the bearish order flow starting from that high all the way to this low. All right, the opacity is very high. Let it make right. I think I usually like 15. 15 gives me some. All right, not that 4, 15. All right, can just. All right, 17 is not bad. All right, so that's the zone, and then we can clearly see this one here is another valid pullback. So this one here can also validate an order flow. So yeah, an order flow, and we say the order flow that comes before the inducement, doesn't matter what kind of inducement, that order flow or that order block or that POI is automatically invalid. So in this case now, yeah, lucky enough in this trading range we have two POIs. So this means now you can just say that this one is the decisional and this one is the extreme, and we will be right because there are only two that are unmitigated and they are valid. And in this case we can clearly see that the decisional POI is already mitigated exactly right here. So price has already mitigated the decisional POI, and that is right after it failed the inducement. So right after it failed the inducement, it mitigated the decisional order flow. In this case, now it's an order flow because that's what the trading range gave. So in this here, you can clearly see that's the order flow. And now if you have like learned about these reversal patterns, I want to believe that by now you know that this one here is what we call the, should I say that's a bullish engulfing, or should I say that's no, this is not a bullish engulfing because the wicks, you can see the highs in the wicks, but you can call this pattern as, it was something like I can't remember. All right, anyway, but we can clearly see like this bullish candle here. We say that we just check the price behavior. It's not like the names does not matter. Just learn about these reversal patterns, what they say about the market and all of that. So you can see price was printing like this big candle. Then you can see it printed a small bearish candle indicating that the sellers are losing momentum. Then right after mitigating the decisional POI, price created this huge bullish candle to the upside. So with that information, then you can just say like you don't need like to master like the names of these reversal patterns, even though it's good to know their structure, to know their formation, to know what they mean, what they tell, their narrative and all of that. The names does not matter. So in this case, this is a reversal pattern, and right here you can see this big bullish candle indicates buying momentum, and right now I can just place my buy limit, I mean a buy stop right there. Stop loss of course below this, and target a 1:2. We said that direct entries don't give good risk to rewards, and the reason is why I'm actually raising this here is because this is a minor inducement, and we say trades that involve minor inducements tend to be more impactful. So right here, this is a 1:2. Let me make it exactly 1:2. Yeah, somewhere there. So 1:2, and yeah, so let me run price because we are done with it. We said we are using the same time frame, and upon price interacting with the POI, that's when now we get to see or we read what price is telling us, or we read price behavior or the reaction, and that's when now we use the reversal patterns, and also we use the narrative of the candles so that we can get to see a possible reversal, and we can see that possible reversal, a nice possible reversal. And then once you have done that, let's say this is the real market, of course your buy will be from the close of that bullish candle. Stop loss, I wouldn't recommend you placing the stop loss exactly at the low of this candle. I wouldn't recommend that. Just place your stop loss some few pips below there, to yeah, because of the sweeps and whatever. So then after that you can clearly see price did that, and then later, all right, exactly. So you can clearly see price failed this again, it gave another one here, exactly here it gave another signal. So probably on this one here you would have not like been stopped out, but in this first one you can see price stopped us out, of course, on this area here. So probably on, if you have like dived into the lower time frame, probably here like you wouldn't like get that lower time frame confirmation, because the lower time frame tends to give more information and more confirmation than this direct entry. And so because the direct entry, we just get to see what price is telling, the price behavior and all of that. So in this case here, since we are still on the POI, I will now be getting the here, and I said that your stop loss needs to be some few pips below that pattern. You can clearly see that the pattern in this case is a bullish engulfing. So this first pattern failed, but we are still in the zone. The second pattern gave a bullish engulfing, and now that's the pattern. We said we don't use like this low because of the sweep and stuff, and of course this is an order flow, so that will be applying like price may not like on the first reversal, price may tend not to give you the ultimate one, and then give you a second reversal, because an order flow is a bigger or a wider zone. So right here, price, you can see after this bullish engulfing, I said stop loss below here, and you can see also price came and swept below this low. So this means if you had placed your stop loss, of course, here, you can see what had happened. We said the best stop loss or the safety stop loss for for this order flow is obviously below the order flow and your entry, of course. So in this case, if you have done something like that, then that will be reasonable, because I mean that will be very safe, because now even if price violates this first reversal pattern and decides to do all this, what like in this scenario, you will have still be safe because your stop loss is below there. This means that if price now breaks past this past your stop loss, then the decisional POI has failed completely. But in this case, if you do this, you can see your risk to reward will be less, and you would have to extend this here at a big distance for you to get that 1:2. That's the reason as to why we usually tend to place some few pips below the reversal pattern, and yeah, we just let price to play out. But if you want a safer stop loss, once you see the reaction, place your stop loss below here, as long as it gives you a good risk to reward. We know that as per the book, we need to actually target this high, this external liquidity. We just extend here, yeah, because price sometimes may just strike through above a good distance above, like in this scenario. So you can see this here was the break of structure, but there was still this movement all the way to the upside. So that's the movement that we're trying to cash here. So in this case, you can see now, if we didn't be like that conservative, and we just place our stop loss below a few pips below the reversal pattern, then this second reversal pattern is the one that probably will give us that ultimate reversal. And yeah, you can see now price is going into the direction. And by the way, this is mostly happening with the order flows. I have never seen this with the order blocks. The order blocks, once the first reversal pattern has happened, like most of the time, if that reversal pattern fails, most of the time like that order block completely fails. But since an order block is just a small zone, it's just a single candlestick, but in this case it's a wider zone. And yeah, that's why price is actually may fail the first end. So you can see after price consolidating and all of that, yeah, price gave that yeah, ultimate breakdown, I mean ultimate break the upside. So let's have a second example here on this other pair, that is USDCHF. So exactly right here from this structure, very fast, you can see the inducement is taken out, break of structure, right? The major inducement sweep, break of structure. All right, this is not a sweep. You can see it was violated here. So this means that this here was the minor inducement. This here was a break of structure, change of character, change of character. Yeah, change of character. Then inducement taken out, break of structure all the way to the downside. Of course, so we have our new trading range, of course, right now here. All right, so we can clearly say that this here is the break of structure, the current break of structure. All right, so now since we have our current trading range, then let's mark our inducement. This is our major inducement. All right, let me use the shift key. It's just that I'm used to this one here. Yeah, I need some settings. All right, so that's the minor inducement, of course, and then after that, I mean that's the major inducement. This is the high, this is the low. So let me run price and see if price breaks past that. Exactly, price has done that. That's not a sweep. You can clearly see that this is not a sweep. That's there a break past the minor inducement. This one here is the low. That's the high, and we have our complete trading range. And so this is the moment to mark our POIs. Right, so exactly right here you can clearly see I said the POIs usually start with the order flows. So this order flow is mitigated. You can clearly see also this order flow is mitigated exactly right there. And also this order flow is also mitigated exactly on that pullback that formed our major inducement. So this means our trading range does not have any order flows, I mean any valid order flows. So the primary option is now invalid, and this is the moment where we get into the secondary option, which is obviously the order blocks. So starting from the extreme, you can clearly see that that's the order block and it's mitigated. Coming down here, of course, any order block that appeared here, you can see price violated that, so there's no need for me to mark that. So yeah, I can see this here. This is the order block, and price, of course, did that, as you can see. And yeah, on this other order flow, you can clearly see that this here is the can clearly see that this is the order block. Yeah, and I don't see any other order block here. So let me run price and see what price does. Right, so right, kind of price is moving down and down and down and down. All right, what time is what date is this? This is Wednesday, July 2025. USDCHF. I think I Wednesday, July USDCHF. Yeah, exactly right here. I picked this one here, and you can clearly see on this chart. I think Traders Casa gave me some other brokers chart, but if I am using this chart, you can clearly see this here will be now the extreme POI, then followed with the but it's mitigated, so we don't consider that. And the next one is this one, of course, which is mitigated too. And now, since it's mitigated, we get back into we get next to the other one. And you can see this blue candle is the one that took the previous candle liquidity sweep, the previous candle high. So this means this is the order block, but is not associated with the fair value gap. I shift to this next candle, not associated with the fair value gap, and then now the third candle is the one that is associated with the fair value gap. Exactly right here. So in that case, that's the reason as to why I picked this area, because you can see this is the major inducement, and we said the POI that comes right after the major inducement or minor inducement, or majorly the in general the inducement is actually the decisional POI. And also in this case, this is also the extreme order block, because I can see all the other order blocks here are all mitigated. So this is the extreme order block as well as the decisional, but in that case we'll just call that the extreme order block. Yeah, I picked this, but I can see Traders Casa gave me some completely different whatever. So you can see price, the POI was supposed to be somewhere here, but you can see using the traders cursor price, this one here is the order block, but using the trading view of Fusion Markets, I mean as the broker, you can see this is where the extreme POI is and price reversed from it. So in this case, we can clearly see this is I think this is another pattern that I think that the piercing line is the piercing line bearish or bullish, whatever. But this is a reversal pattern. You can see price has been forming bullish candles, but once mitigated our extreme like order block or our decision order block in that case, because it is the one that is coming. No, now in this case it will not be a decisional because there is no any other POI on top here. So we'll be calling this one here as an extreme order block. So in this case, I wouldn't even have showcased this because now I'm showcasing the final one, which is the extreme POI mitigation. So upon seeing that reversal pattern, of course, you do that, stop loss some few pips above, then target, of course, a 1:2, depending, because if you like extend it to where it needs to be set and it's not giving you a good risk to reward, of course, for me, as per my rules, I don't take a trade that is having a risk to reward that is less than 1:2. So I usually extend in that case, and you can see in this case, price just giving a good reaction. This means that order blocks give like good structure compared to, I mean, gives good reversals on these direct entries compared to order flows. So guys, I think the main point here was just the identification of the POI and knowing how you will be getting the reversal, and so I think I'll end the session here.